Okay, we might see some more people today. But for the sake of time, I think I'm gonna go ahead and start. Let's see. So what I'm looking at now is the SPY, the market. Like we were talking about, we broke up above the rising wedge. We hit my 417 target, got rejected from that target, and is now kind of consolidating. We were talking about yesterday how there might be some support down here. We actually saw more buying than I was anticipating. Hopefully that's just because of the low volume that we have. Like we all know, if there is low volume, then the market will float upwards. That does not mean that it's a good idea to buy the market on float, because if volume suddenly shows up, it's going to sell off even harder. Manipulate a market that is on low float, especially now when we're so overdue for a pullback. What I saw yesterday was we broke a new record. Never in history has so many stocks in the stock market been above the 200 MA. That means that 90% of all stocks in the stock market are overvalued and overbought. They're on the upper scale of the RSI. And that to me is very, very scary. That is why I keep talking about us being close to a bear market as of right now. We're thinking it's a bubble. It's not really a bubble before it pops. We're in a strong uptrend that keeps going up. My next target is all the way up here at 444, which is a Fibonacci extension from all the way back in the early days of the SPY. I can't exactly remember the date for it. I don't really think, but I think we're gonna try to. If my 417 level breaks, I think we're gonna see some sort of a blow off top, a really high spike in volume. But given the overbought nature of this market, I don't think we're gonna stay there for long. I think that big money are gonna try and sell the market and create some sort of a panic scenario. It can happen any day. It can happen any hour, any minute. We don't really know when it's going to happen. Up until then, we can just play the charts and continue our move upwards. We can also take a look at different parts, like the VIX, which is the VIX, which is the volume index for the SPY. We look at the volume index because we know that as long as there is low volume, like we're now, then the market will continue to float up. We had a break of a downtrend 2 days ago, and today we're back testing it. We see this smaller blue line. We're still above it, but it's not looking like volatility wants to happen yet. I still think we might see some of these lower ones. If we see these lower ones, I will be adding to my VXX, which is an ETF that follows the VIX. So keep the VXX. I'm full in accumulation mode of the VXX for potential of it going parabolic once the market drops. We can see it's kind of odd to me that we can see the US 10-year yield going up at the same time as the market is going up. In general, we see green days in the yield when we see red days in the market. You can see still we're just consolidating here above the 50 MA. Again, if this breaks up above 2, the United States of America will not be able to sustain that amount of debt growth long term. So it's a really, really bad sign for the market. As far as the oil market goes, we actually ended up breaking down below the flag. So remember back here when we had the flag, how it broke up above the flag, and I said it broke up while it was options X. During options X, banks have more money to manipulate the market, and this could have been an attempt at manipulating some people to go long oil things and then selling it off before dropping it hard down. I'm a bear in the oil market. I think it's going to go lower. So far, so good. The IWM is and what it shows us the 2,000 smaller companies in the market, and it's still holding to our head and shoulders pattern here. We had a big update yesterday. It's still underneath the 50 MA. Pre-market is actually gapping above it, but we'll see where it opens up. It's always hard to tell before the market opens. Again, it is really odd to me because yesterday I think I was talking about how there is a correlation between the US 10-year yield and QQQs. So the tech sector should be falling while the US 10-year yield is rising, but they're both going up, which is odd to me. But we'll keep that in mind. We'll see if tech can pull off another rally. They're again very overextended. If the top breaks, I think we might see 350 on the QQQs. The reason why we follow these is because we know the tech stocks will continue to be strong if this is strong, because this is the tech sector. Then we have the SMH. SMH is the semiconductors. Semiconductors are also an indicator of risk on and risk off environments. Risk on environments are when stocks are expected to go way higher, so people put on more risk in order to make more money. Now then that I expect people to want to do less risk, I'm looking for this to fall. I'm looking for this trend line to break as a confirmation of my theory that the market will fall. Gold is something that has already confirmed because people buy gold when the market is under pressure. We can see here that people are accumulating. We have a break of the trend line, so gold is on the way up at the moment. Again, there's a big gap between the demand for the physical gold market and in digital form like we see here in the chart. At some point, a big rise. Now let's talk about what's exciting right now, because I'm a bear in the market, but I'm still a bull in the cryptocurrency market. I don't like Bitcoin. One thing I noticed overnight was when I was going back into time, I was looking at bull flags here for the BTC, and the flags that we were looking at was this flag. I was thinking I drew this flag on wrong last time. If I draw it this way and use this resistance and not the gap up and gap through, just ignore this, be because of froth, because of hype, because of something else. If we use this, then this chart looks exactly like it did back in 2017 for Bitcoin tops. If that is true, this is the Bitcoin top and we are further along than we thought we were. The reason why I say that is because on the way down during the 2017 bull market, we saw the cryptocurrencies or the altcoins taken off. What do we have this morning? As Bitcoin is slowly moving down, we see ETH making a new all-time high. A new all-time high for ETH means that people are moving money away from Bitcoin. It doesn't mean that the top is in for Bitcoin, but if the pattern is going to repeat itself and going to be the exact same, then the top is in for Bitcoin, in my opinion. The way I would confirm that is by looking at the altcoins and seeing them take off. First one to take off is always ETH, and then the others will follow. I like XRP, but XRP's history doesn't show that while Bitcoin falls on the next fall that it's going to do now, it shows that it's going to consolidate for a little bit. Either consolidate, might have a quick gap down and fast buy up before we take on our next leg up. Our next leg up will not come before Bitcoin has hit its bottom in the retracement. But when it finds its bottom, we're going to look for the 702 retracement in Bitcoin. Let's see if we can get the charts back. So if this were to fall, we would see it potentially go down here, and we would say it slowly rising its way up to a 702 retracement before falling. We would want to be exiting in this area. For now, we're going to have to wait and see if Bitcoin wants to make a new top, but if history keeps repeating itself, this looks an awful lot like a breakup, and XRP did find its top as this broke up, like history showed. So we might be further along in the Bitcoin history than previously thought. ETC is following Ethereum, which is a good sign. That also shows me that we are about to make a new high, because ETC has a history of going up while XRP is doing the consolidation. So I'll be playing my money in ETC, keeping it there until we see XRP breaking out. Once it gets close to breaking out, I will exit ETC and add to my XRP investment. Okay, let's talk about the US dollar. So the reason why we look at the US dollar is because we can look at panic, and people tend to flock to the US dollar as soon as the market is in trouble. We are looking like we're slowly going down to this support that we're looking for. I do think that the dollar is going to drop hard once cryptocurrencies explode. It's going to be popular to have cryptocurrencies, and that in the future is when I'll be exiting all of my cryptos. And I'll actually be in the dollar because it's getting closer to a cheaper way of holding it. So today in the market, we have news in the real estate market. So real estate stocks will be in play today for us day traders. Let's see if we can get the charts here. Real estate is already going parabolic like the rest of the market. Like I was mentioning earlier, that 90% of all stocks in the market with a new record high. We have never been this overbought before, ever in history. And here you can see the real estate chart is showing us some of that too. If we have more news that might cause this to go up today, I still think we have a little bit higher to go, simply because broke this resistance back from when COVID started. So we'll see if there's a little bit more here in real estate, but ultimately I'm still a very, very bear. I would stay scared as long as if you're not a day trader in this market, you should be sitting on your hands, learning as much as possible and watching it, because what's about to happen is, one, going to be very scary for the people who hold stocks long term. Two, going to be the greatest opportunity for people who have money on the side to buy probably in their lifetime when that falls. Let's take a look at what I have been trading. I got stopped out of this yesterday, but I sold half when it was at the bottom. So we had the break of the trend line. It's still a trade that you might be able to take. If we see some consolidation and a breakdown, I would enter a second position. Again, targets is down here at $16, $15 at my red line. Next stock that I'm looking at is OBLN. Here we go. OBLN. I have some slow charts here. It is consolidating in a perfect bull flag, and it hit some support down here, which was the perfect buy level. We'll see. For a momentum trade, that means that you'll be playing bull flags and taking profits as it goes higher. If this breaks, I'll be adding a position for a day trade, taking half as it hits the second line because it might get rejected like it has been before and continue to go lower. If it goes lower, I'll probably here down at the second support line. It is lower by a tiny bit, so we'll see where that goes. Keeping my eye on the weed sector. So TLRY, we've seen other weed stocks get a little bit of a bid, but those ones have already gotten all the way down to the trend line that's down here. So I'll be looking for this lower trend line. Hopefully down on this green line is the perfect buy for me in TLRY. I'll be buying that with a target of about $28. So you can almost double your money. One thing I saw that was interesting was we've been got a bear flag in the NIO for a while, and it's still within a range, so I wouldn't go with a big position, but potentially because we broke this flag, basically canceled the bear flag to the upside here. If we make a higher high, which is on the 41.78 level, I can see us going up and revisiting the tops. That again, not a good entry for a long-term hold. If you want a long-term hold, you're gonna have to wait for it to break to the downside, and you can get it for under $20. So keep that in mind. Another positive thing that we have seen in the market is VIAC. So VIAC has been what we have been expecting the market to do. So we have had a parabolic move, we found a sharp top, and then it just hard sell, and then depression period. Out of this depression period, there are targets because people that was in here was so overly leveraged. It went from being way overbought to way oversold. So it has to make a rebound of some sort before it can either continue to go down or make a higher high. And we broke out of the downtrend yesterday, and we're gapping up in pre-market. So for a day trade and a short-term swing trade, this is a phenomenal setup. I will be trading this today. Let's take a look at XONE. Okay, so XONE, we had the sell-off that we wanted yesterday, but it was bought up from the support line that's down here, still in the breakdown. So I'll be looking at this line for it to break. It is probably one of the stronger supports, but if it breaks, we'll see targets way lower. I low-key expect it to break. It's just going to be a matter of time. Might be now, might be next week, might be next month, but I'm willing to wait. Let's take a look at Netflix. We had Nick Santiago come out with some targets that he posted on his Twitter feed that I'm giving you right here is this green line. If we see a sell-off in Netflix, I'll be taking this trade. If we see a pattern to go short up here and the market is weak, I'll be shorting the market or shorting Netflix on a break of smaller patterns. But I will definitely be taking my profits on that short on here and might even reverse the position. So in a perfect world, we would go short if the market sells off here in Netflix, and then cover our position and reverse it and go long from here. Last one I want to go over today is American Airlines. They're reporting earnings, and they're up today because they were talking about how they're actually positive in cash flow, which is a big change because this means that they're surviving or going to survive if this continues. might be a trend change. Again, the entire market is way overbought, right? But for the few stocks that are not way overbought, this has still not made it back up to where it was pre-COVID levels. So for smaller swing trades, potential day trades, I would not touch this for long-term holds before we have had a correction in the market. But for small swing trades and day trades, I think it's a good idea to keep in mind for some breakout flags, potentially some momentum.